Good morning, this is Bloomberg Daybreak Europe. Happy Wednesday, I'm Tom McKenzie in London. These are the stories that set your agenda. Global stocks trade cautiously ahead of the Federal Reserve's final rate decision of the year. Kevin Hassett says there is room to cut more than 25 basis points. The biggest listing of all time, Elon Musk's SpaceX, said to move ahead with plans for an IPO next year, targeting a valuation of $1.5 trillion. We bring you our Bloomberg scoop. Plus, Volodymyr Zelensky says he expects to have a meeting with European leaders and President Trump in the coming weeks. This as reports emerge, the US has given Ukraine days to respond to a peace proposal. So there is a sense of caution ahead of this Federal Reserve rate decision. Markets almost fully pricing in 25 basis points, but it's the dot plots and the economic forecasts and the language, of course, of Jay Powell that will be scrutinised. Also, how much division will there be atop the FOMC? So European futures within that context currently pointing lower by 0.2% after 3 days of losses. Modest losses, but nonetheless, you are set for a fourth day of downside across European equities if these futures translate into that downside action. FTSE 100 futures pointing lower by 33 points here in the UK. S&P E-minis pointing to very, very modest gains, essentially flat. There was a bit of a divergent picture by the end of the close on Wall Street yesterday, with the Nasdaq posting modest gains and the S&P a little softer by about 0.1% by the close. Nasdaq 100 futures today pointing lower by 15 points. Let's flip the board and have a look cross-asset. Then Treasuries, of course, will be in focus, as will the dollar, as we lead up to that Fed decision. 4.18 right now on the US benchmark 10-year, largely unchanged across US Treasuries. Euro-dollar at 1.16, also unchanged on the single currency. The interest, though, is there when it comes to silver, which is breaking above $60 per troy ounce for the first time. For the first time on record, the gains for silver year to date more than 100%. Compare that to the gains of gold, up around 60% year to date at $61 per troy ounce right now for silver. Tight supplies and expectations of rate cuts boosting demand for that metal. Brent at $62 a barrel, up 0.2% on oil. Let's cross over to Asia right now. Check in with Winnie Su in terms of what is happening across the Asian region. Winnie standing by for us in Hong Kong. Winnie.
Morning, Tom. So really, there's not a whole lot going on in the Asian market today as we await for the Fed. However, a standout here is SK Hynix. We see the stocks up about 2.5%, and it was leading gains in Asia after the company said that it's considering a listing on U.S. stock market for to improve its corporate value. However, the biggest drag today, though, are the Chinese stocks. Yes, we're seeing a bit of a recovery here after the property stocks surging right now on some talks around the support for the property sector as we hold this Central Economic Work Conference right now. However, overall, it seems like Chinese stocks losing a bit of a steam here amid this latest set of weak data. As we flip the board and take a look at the CPI and PPI data that we got for China. So the latest data showing a bit of a rebound when it comes to CPI numbers, up 0.7% for November numbers year over year, and that's better than the 0.2% that we saw in October. However, the real disappointment here really is the PPI data, a decline of 2.2%, below estimate of a decline of 2%. So it really goes to show how the deflationary pressure is still weighing on the economy and also the market. So investors really still want to see firmer price numbers and also more fiscal support. Now we flip the board and take a look at another asset here that we're closely looking at, which is the Japanese yen. Here, around the 156.7 handle against the dollar, and it is still hovering around that 2-week weakness here, even though we are right now pricing in 90% of a rate hike by the Bank of Japan. So it is still a lot of concern around potentially a stronger dollar as we maybe potentially get a hawkish tilt from the Fed, and also concerns around the fiscal spending after we got that latest set of GDP data that came weaker than expected. Back to you, Tom.
Winnie Su in Hong Kong, thank you very much indeed. As Winnie was mentioning, of course, the Federal Reserve looming large over markets, and not just in the US, but in Asia and in Europe again today, of course. Federal Reserve officials prime then to deliver a third consecutive interest rate cut later today. 25 basis points is what is expected by traders. Kevin Hassett, who is seen as the front-runner to replace Chair Jerome Powell, believes there's room for the central bank to cut more than 25 basis points.
Jay Powell has done the right thing, which is he's taken the far left people of the board and he's coalesced them around, it looks like, a rate cut, which is the right move right now. I might like a bigger one, but I think that that's what the Fed chair has to do. Don't forget, you're managing a committee. And so getting rates down right now, it's a good thing. There's a lot more room to go.
There's a lot more room to go. Let's bring in Bloomberg's Valerie Teitel right now. Val, I find it difficult to unpick the pitch for the job from Kevin Hassett and what he will fundamentally do if he gets that job and what basis he is putting that view on.
Well, look, I think he said it right there, that the view of the Fed chair, the role of the Fed chair is to find a consensus, to bring the committee together. And Powell is really going to be tested on that today. Will he do enough to bring the consensus together at the FOMC and minimize dissents? That's the big question on markets' mind. We've had around 5 of the more hawkish FOMC voters express disagreement with a cut today. Will he be able to change any of their minds around this 2-day meeting with the decision out later this evening at 7 p.m. Another key focus, again, here is just the lack of economic data. Is he going to have a hard time convincing the committee together on a consensus, given essentially the best data we have is all the way back in September? We're still waiting on the November backlog, and the October data went largely uncollected. How hard is it going to be for him to essentially manage this committee, given the lack of data that we've had because of the government shutdown? I want to also mention the market context to which we're headed into this decision. Flip the board, because we have seen a bit of a hawkish repricing when it comes to front-end interest rates, especially around the 2026 pricing. We're now pricing in just 2 cuts from the Federal Reserve in the year of 2026, just 2 25 basis point cuts. A lot of this has to do with the fact that previously Powell has characterized the last cuts as a risk management exercise. Today, perhaps the risk is that he messages is that the risk management exercise is over. They're ready to slow down their pace of cuts as they wait for more clarity in the data, to wait for more clarity on how inflation is going to be impacted by tariffs. That is the message that is quite a hawkish tilt from Chair Powell in the Q&A later this evening. I also want to remind everybody that the data backlog, we are still due for a lot of data next week, and this could tempt the markets, Tom, to basically shrug off any guidance for January that Powell gets, saying you don't know what the data is, and neither do we for the month of November. We get that November data next week, November NFP and November CPI. We're still waiting on October retail sales, which is a good guide for how GDP is shaping up for the end of the year. We then resume a normal schedule of data come early January. So 2 sets of CPI and 2 sets of jobs data before the Fed convenes again at the end of January.
OK, more data to come, and some of that landing next week after the decision, of course, later today. Bloomberg's Valerie Teitel with a setup for the Fed. Val, thank you. We're going to have special coverage, of course, of the Fed decision and Chair Powell's press conference. Tune in from 6:30 p.m. London time. Now, Bloomberg has learned that SpaceX is moving ahead with plans for an IPO next year, potentially the biggest in history. Sources say it aims to raise significantly more than $30 billion, with the company seeking a valuation of about $1.5 trillion. Let's bring in Bloomberg's Julia Fioretti, who covers the deal-making space for us. Julia, how significant then would this IPO be?
Tom, it's really a significant IPO if it comes to pass. As you said, it's targeting to raise well over $30 billion, which would put it far ahead of the previous IPO record set by Saudi Aramco back in 2019 when it raised $29 billion. It's also a hugely well-known name. It's the world's most prolific launcher of rockets. It dominates the space industry. And it's currently doing an insider share sale at a valuation of over $800 billion, which makes it the world's most highly valued private company, and it's one of a number of these high-profile tech companies which are still private and have raised copious amounts of money privately, all the while delaying going public. So an IPO of a name like SpaceX would be a huge test of the market and of investors' demand for a name like this, as well as a test of the ongoing recovery in US IPOs that we've been seeing over the past few years.
Yeah, it could be a significant indicator on that front, couldn't it, Julia? What do we know about the rationale, the logic for SpaceX pursuing an IPO when they've been able to raise capital on the private markets very easily?
Well, it's partly down to the fact of its Starlink satellite internet business, which is growing at a really fast pace. It's accounting for the majority of its revenues, and there's also the promise of a direct-to-mobile business. So all of this requires continued investment, and obviously it has been doing that privately, but the public markets might be the way to go. There's also its Starship rocket, which is designed or planned to carry a huge number of Starlink satellites and eventually cargo and people to the moon, and then to Mars. So all of this requires a really high investment. And we've also learned that SpaceX is planning to use some of the funds in the IPO to develop space-based data centers, as well as purchasing the chips needed to run them. So it's clearly all basically designed to continue funding its fast growth and to keep it a leader in the space industry.
Yeah, there you go. Space-based data centers. Bloomberg's Julia Fioretti, thank you very much indeed on that potential mega and historic IPO 2026 for SpaceX. Potential, of course, a story you continue to monitor for you. Meanwhile, President Trump has chided Europe in an interview with Politico, calling its leadership weak and saying Russia is in a stronger military position in its war with Ukraine. Bloomberg's chief Europe correspondent Oliver Crook joins me now. Ollie, what more do we know about these comments from President Trump vis-à-vis Europe and Russia and, of course, Ukraine at the centre of it all?
Yeah, I mean, it's all coming together at the same time, Tom, despite, there's obviously the negotiations going on with Ukraine. We had that national security document that dropped on Friday that really, I think, was really poor reading for a lot of people across Europe and in Brussels. So let's try to distinguish those two things. The first is the sort of peace negotiations that are ongoing. What we understand now is that that 20-point document is sort of shuffling hands. It's very much a living document, according to Volodymyr Zelensky, who's been speaking to a lot of press over the last couple of days to try to get his sort of opinion out, and saying that there are also going to be other sort of documents that are being shaping and form the basis of what could be a potential peace agreement. The second one will go into the specifics about security guarantees, and the third will be about the sort of recovery of Ukraine. Though we did get a little bit more information, Tom, about that conversation that took place on Saturday between Volodymyr Zelensky, Jared Kushner, and Steve Witkoff from the Financial Times, saying that really they put a lot of pressure on the Ukrainian president and really sort of put forward the view from the Trump administration that they'd really like to get this whole situation squared away by Christmas, thus putting more pressure on Zelensky to basically agree to the proposal that is on the table right now for the United States. The problem seems to be still from the Ukrainian perspective is there are these big asks in terms of territory, big questions about giving more territory to the Russians in the Donbass without those clear security guarantees from the United States, from European allies, i.e. the architecture, the framework by which that guarantees Ukrainian sovereignty into the future in case there is another invasion. That is absolutely key, Tom. I think that is probably the single most important part of these negotiations as far as the Ukrainians are concerned. One more interesting thing, Tom, and this was an interesting situation where you see the Zelensky sort of mantra, which is that there are basically no bad ideas out of Washington, D.C. There has been sporadic pressure from the President of the United States on the Ukrainians to hold elections. And Zelensky said very openly yesterday that basically he'd be open to holding an election within 60 to 90 days if the Europeans and the United States could secure basically Ukraine, could provide security guarantees for Ukraine. So really it seems Zelensky putting up his own office in terms of the negotiations in order to try to guarantee those security guarantees from the United States and from Europe.
Yeah, fascinating in terms of how Zelensky is looking to leverage that particular role. Ollie, these comments to Politico then from President Trump are kind of a reminder that he does gravitate towards power and strength, even if that is amidst and held by what is typically an adversary of the US. What has been the reaction in Europe to the president's comments?
Yeah, so listening to those comments, obviously they receive pretty poorly here in Europe. That being said, the Trump is basically claiming that the Europeans talk too much and don't act enough. I think that is a fairly valid critique, and one that I think even the Europeans can acknowledge has been a problem for them in the past. That being said, he's going to a much broader idea about European decay, the fall of European civilization. But something that I thought was interesting was he's talking about the Ukrainian people and their military, saying that they've done a tremendous job and that they deserve tremendous credit and bravery. That said, but at some point, size will win generally, and this is a massive size, referring to Russia. So this, I think, just sort of lays out the Trump worldview that big is better, and that is the sort of thing that dominates, saying that basically no military conflict can be won by a smaller nation. Of course, there are many examples of that in history not being so. The biggest potential military mismatch in modern history, of course, was between the United States and Vietnam, and we know how that ended. A lot of people who are fighting defensive wars tend to tilt the odds in their possible favor. That being said, I think for the Europeans, what they would like to try to push back against and get involved in this peace negotiating process has been very difficult from the Trump administration that has been basically blocking that. What is clear, and again, Tom, this is what we saw from that document out on Friday, Trump wants a quick end to the war. He wants basically Russia to no longer be an American problem. He wants to end it here and basically shift that burden onto the Europeans, something that the Europeans are scrambling to be ready to do and are not quite ready to do yet.
Yeah, the president is clearly impatient on that point. Bloomberg's chief Europe correspondent, Oliver Crook, thank you for that update. Coming up, big questions for the UK Chancellor, meanwhile, as she faces the Treasury Select Committee over her budget. We're going to have analysis next. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, UK Chancellor Rachel Reeves is to be quizzed by the Treasury Select Committee today over her budget. For more, let's bring in Bloomberg's Markets Today co-editor Morwenna Coniam. Morwenna, she's going to face some tough questions then, the Chancellor. She has already, of course, faced some tough questions post that very controversial budget. What are you going to be watching for, and to what extent are the markets on tenterhooks? How closely are bond traders with exposure to UK gilts going to be watching this?
I think that's a good question. I feel like the budget now was 2 weeks ago, and in some ways global bond markets, or certainly UK bond markets as well, have moved on. There's a lot of sort of global pressures at the moment, and that's been, we've got the Federal Reserve meeting today, and so people are really focused on that now, and I think a lot of the movement that we've seen in gilts post-budget hasn't necessarily been driven by domestic factors. However, I think what she does say in answers to the questions, and we of course don't know what those are going to be, about how she's left the government finances, about the pressures on consumers and confidence, and particularly with regards to the way that the budget was sort of leaked ahead of time. I think that will be quite interesting, and whether she's looking to sort of give more confidence, I think, to the market. We've seen consumers pulling back on spending. A lot of the reports that are coming in now from the period just before the budget do show a lot of hesitation and concerns that perhaps were unfounded. So I think that a lot of that will be the focus today.
And the BOE coming through with its assessment in terms of the inflationary impact as well. There's also a poll from YouGov on people saying that taxes are too high. I guess that's very much a kind of dog bites man kind of story. But is there anything that the Chancellor is expected to say in terms of the tax burden on the individual level, on the corporate level, the household level? And how should we be thinking, separate to that, about the inflation trajectory then, and how the BOE kind of weighs that up? So I guess it's folding two questions into one on taxes and one on the inflation story.
Yeah, so I think the taxes question is interesting. That, as you said, people don't like being taxed more. And that has been something that perhaps people felt did come through from the budget, particularly things like, well, the child benefit, cap was removed, but actually so was the salary sacrifice. But there's also those property taxes, both on mansions, but also impacting businesses in sort of high real estate value areas. And so I think that's something for the business community that people will be particularly interested in, because I think after last year's budget as well, increased the national insurance contributions. And then this year we did see another increase to the minimum wage. There is a sense of people feeling squeezed and concerns about, what's to come next there as well. So I think that will be one thing we're looking at. But then also whether these measures do actually reduce inflation. As you say, the Bank of England did yesterday give their analysis, and they said that they expect them to reduce inflation by about 0.5% by the spring. So I think that would be something Reeves would be looking to highlight. It makes it perhaps slightly more likely the Bank of England would be confident in reducing rates, which is something that businesses certainly would generally like to see.
Moana, thank you very much indeed. A great setup of what to expect and what to watch for when it comes to the scrutiny of the Chancellor once again by the Treasury Select Committee later today. Moana Carmen from our Markets Today team. Coming up, Australia beginning enforcing a world-first ban, booting young people off social media sites. We're going to have the details next. How well it's being received or not. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, in a world first crackdown, Australians under the age of 16 are now barred from accessing social media services like TikTok, Instagram and Facebook. The landmark move means young people can no longer have their own accounts in a bid to curb the spread of harmful content and cyberbullying. Joining me now is Bloomberg Tech reporter Newly Purnell in Hong Kong. Newly, how is this being enforced then?
Yeah, Tom, a really interesting development in Australia that has really global ramifications because we see other countries doing this. Yeah, today's the day. So we have seen that some of the platforms are asking when you sign up, when new users sign up, they're asked to enter their birthday. If you enter a birthday that makes you less than 16, they put up an error message saying, sorry, not allowed. Now, for users on the platforms who are below that age, typically they say you're supposed to be over 13 to access the platform. So for those existing users, they are doing things like asking them to submit video selfies or to upload documents. And so far, it seems that the services are, in fact, keeping people off. There aren't reports, too many reports of people bypassing it. And one of the objections has been, it seems like it would be pretty simple to bypass. And the government has been pretty clear. We don't expect it to be 100% foolproof, but so far the platforms seem to be complying and abiding.
And Newly, you nodded to this in terms of other countries watching how this law unfolds and to what extent it may be a success. What are the responses from other nations, and how are tech companies adjusting to this law?
It's been really interesting to see since the law passed at the end of last year, additional countries around the world saying, actually, we're inspired by Australia. We found in our reporting for a story recently that that policymakers in places like Denmark, Indonesia, Brazil, some European countries say we're following very closely. We've been inspired by what Australia is doing, and they want to follow suit. They say this is big, bold action. We think that the tech platforms haven't been responsive and aren't keeping their services safe, and so we like what Australia is doing. They're putting the onus on the tech companies. The tech companies, should come as no surprise, they don't like this rule. They say it's misguided, that it will be very difficult to enforce, that it's technically difficult to figure out who's under the age of 16, and they say that it risks driving young people to more dangerous services that have fewer safety guardrails. So, but yeah, I think really interesting to see the kind of global momentum that seems to be building. Again, the tech companies not in favor of it, but more and more regulators around the world saying we're going to watch and see how this unfolds. But we like the idea of keeping kids off these platforms because they say they have shown over the years that they're just not safe for kids. There's too much toxic content. The algorithms are addictive, and they say we're going to watch and see what happens in Australia and maybe do something similar.
OK, an important test case. Bloomberg's Newly Purnell. Thank you very much indeed. Coming up, staying on technology, but switching to a very different segment of that story, the quantum computing company that has raised one of the largest Series A rounds in the UK. We're going to speak exclusively to New Quantum's CEO. That's coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Wednesday. These are the stories that set your agenda. Global stocks trade cautiously ahead of the Federal Reserve's final rate decision of the year. Kevin Hassett says there is room to cut more than 25 basis points. The biggest listing of all time, Elon Musk's SpaceX, said to move ahead with plans for an IPO next year, targeting a valuation of $1.5 trillion. We bring you our Bloomberg scoop. Plus, Volodymyr Zelensky says he expects to have a meeting with European leaders and President Trump in the coming weeks. This as reports emerge the US has given Ukraine days to respond to a peace proposal. Let's get to the markets then. Flatlining, and it seems many investors on the sidelines until we get more clarity from the Federal Reserve. Expectations, of course, that you get that 25 basis points, but it's the forecast, it's the dot plots, and it's what we hear from Jay Powell himself that will be consequential, arguably more important than the cut itself, given what's priced in. European futures set for a fourth day of losses as things stand, pointing lower by 0.2%. FTSE 100 futures here in the UK pointing lower by 28 points. S&P E-minis a little higher after a little bit of softness by the close yesterday. NASDAQ 100 futures pointing to gains of just 8 points after eking out upside of 0.2 by the close on Tuesday. Let's flip the board and have a look cross-asset. Treasuries, of course, in focus ahead of the Federal Reserve decision. Currently, the 10-year yielding 4.18. Euro-dollar at 1.16. Silver having broken through $60 per troy ounce for the first time on record, up 1.2% in the session, up more than 100% year-to-date for silver. Brent at $62 a barrel, just gaining 0.3% so far in the session. Let's get a closer look at what to expect then from the Federal Reserve and bring in Bloomberg's Valerie Teitel. Val, talk us through the market positioning and how volatile the session could be on the Fed.
Well, look, it's going to be an interesting session, an interesting evening tonight as we see how Powell's powers of persuasion around trying to find a consensus around this fractured FOMC, just how many dissents show up in the decision that's going to be released at 7 p.m. UK time. Don't forget, we have Stephen Myron, who in the last two voting sessions has voted for a 50 basis point rate reduction, more than the committee has decided. And then on the more hawkish side of things, we have 5 of the more hawkish voting members who have expressed some disagreement at cutting rates of today's decision. It's going to be very complicated for Powell to piece together a message in the press conference, a message in the Q&A. I expect that to be quite a muddled guidance that he is going to be giving for the months forward because of this fractured Fed. And also because, frankly, the Fed is flying blind. We're still waiting for some big data backlogs to clear. Flip the board. I just want to remind our viewers that we're still waiting on November CPI. We are still waiting on November non-farm payrolls. So even if we do get a hawkish message tonight from the FOMC, there is a likelihood that the market could shrug it off, saying we have to wait till next week. Next week could actually be more telling for what the Fed does in January than what we hear from Powell. So keep in mind of that. But also in the market context of late, we have seen a hawkish shift, at least in front-end pricing for the Fed in 2026. The market is now just pricing in 50 basis points of rate reductions for next year. That's the lowest that we've seen going all the way back to June. So this hawkish shift in the front end is really tempting the market to believe that now that Powell has characterized the last few cuts as a risk management exercise, maybe today he'll say that risk management exercise is coming to an end and they are ready to slow down their pace of rate reductions.
OK, Bloomberg's Valerie Teitel, thank you very much indeed with a preview of the Fed. Switching to tech now, British startup New Quantum has raised $60 million in Series A funding, one of the largest for quantum ever in the UK. It's also the largest financing round ever by a quantum networking company, cementing the firm's status as global category leader. Joining us now from exclusive interview, New Quantum's CEO, Carmen Palacios-Berraquero. Carmen, great to see you again. Congratulations on the raise. How much of a validation is this for you and the team and what you've been working on?
It's a huge validation. I mean, New Quantum is building the connectivity layer for quantum computing. So what this means is that our networking technology will be able to take near-term quantum processors and interconnect them together to create a larger computer that is finally powerful enough to unlock the commercial value of quantum computing. And with this funding, it cements the creation of this new category, which is quantum computer networking, and of New Quantum as the category creator and the leader globally.
And that's really important in terms of explaining where you guys fit in the stack for the layperson, because there are those companies making the quantum computing chips, those making the quantum computers themselves, and then you sit in that networking space to be able to scale this technology. So how do you expect? What are your priorities for that? It's a big raise at Series A, $60 million. How are you putting it to work?
We know exactly what we're doing with it, and is that we're going to build it. So we're going to, for the first time, connect two quantum processors that are far apart and demonstrate that connection with high speed and high quality enough that it can push computing forward. That's never been done before. At the same time, we'll continue to work with the leaders in the quantum computing space to integrate both of our technologies, computers and network, so that very soon we'll be able to start scaling out and start to build a system that look like small quantum data centers and that can accelerate our path to value.
So you need those partnerships with the companies making the hardware, the other companies in this quantum computing stack. So how dependent are you on their progress in order for you to be able to push forward as well? Are you pretty dependent on them making the kind of innovative breakthroughs that need to happen in order for your work to continue and to move forward?
I would have said 3 years ago, yes, but not anymore. Especially this year, quantum computing has turned a corner, and now quantum processors, especially in the most mature platforms like trapped ions, quantum processors are good quality enough and large enough. And in fact, this year we published a study that said that with a processor that exists in 2024, we could interconnect it with our technology and create a large computer that could run Shor's algorithm, meaning it could decrypt our current encryption. Of course, that would be quite a large system and maybe not the most efficient, but we could do it. So actually, if everyone stopped making progress, we could still get there. But of course, everyone is making huge progress, and already since 2024, processors are much more powerful.
This is always the question when we speak to those leading quantum computing companies. But when does quantum computing become commercially viable on scale, at a material level?
It becomes commercially scalable when we can scale in a modular way. So I think in 2027, we'll see the first sort of narrow scientific advantage with just one processor. That means that it's a problem that a classical supercomputer can't solve, but it's a problem that only maybe certain academics care about. The monetary value of that problem might not be too high. Around 2029 is when we think that both computers and networking will be integrated and mature enough to start deploying these small quantum data centers that now can scale in a modular way, are elastic, and can start to deliver that commercial value. So it's like 2029.
2029. Okay, interesting in terms of the time frame. Where is most of that demand going to come from, do you think, in terms of corporate customers and government customers?
Government customers will still be there. They're still our biggest customer and investor today. But end users are entering quantum computing really strongly. And for example, the lead of our current round is National Grid Partners, so the venture arm of National Grid, who, aside from the financial potential behind New Quantum, National Grid is really interested in quantum computing because of its energy grid optimization applications and some other applications.
Where does the UK and Europe stand in the competitive race towards quantum computing versus the US and China?
The UK and Europe are still up there in the game. The UK is still one of the leading countries in the world. The UK government has been consistently putting out good long-term strategy. And in fact, in June, the government pledged another £500 million to creating a utility-scale quantum computer.
Is that enough?
We're waiting now for that to really start getting deployed. We hope that with the spending review now we'll hear shortly about it. And usually these calls have really galvanized the industry and have really produced a lot of value. So,
I mean, what is your level of confidence that the UK stays at the forefront of this technology?
Very high.
Very high. Okay. In your most recent round, you did get more dollar funding, so more funding from the US. Does that speak to a lack of deep tech funding in Europe, in the UK?
Absolutely not. It speaks to the fact that the best UK-based deep tech investors were already on our cap table. And also it speaks to our global ambitions. We have gotten funding from the US, from Europe, the UK and Japan. And that's how we will be able to get enough capital in the coming years to deliver on our mission.
And you look to raise again in 2026? Would that be the plan? How much runway do you have at this point?
We'll look to raise in 2027 our Series B.
In 2027,
yeah.
OK. What other partnerships should we be expecting you and the team to forge over the next 12 months or so? What are the priorities when it comes to partnering? Are the players within the space and outside of quantum computing?
Both. So we'll continue to partner with the best quantum computing companies out there so that we can integrate our technologies. But also New Quantum just launched what we call the Quantum Data Center Alliance, which will be a forum that brings together the ecosystem that really needs to speak to each other to build these commercially useful systems. So we partner with the traditional data center industry, NTT Data, Equinix, Cisco, and also with end users such as Airbus or National Grid.
OK. Carmen, thank you very much indeed. On the back of that raise, $60 million in Series A funding. CEO of New Quantum, Carmen Palacios-Berraquero, thank you, from New Quantum, of course. And on Friday, Bloomberg Tech Europe takes a deep dive into ASML. It's Europe's, of course, most valuable company, one of the most important cogs of the global AI supply chain. I speak exclusively with CEO Christophe Fouquet about Europe's place in the artificial intelligence race and whether there is an AI bubble. That is Friday, 6:30 a.m. London time here on Bloomberg TV. You can also watch, of course, on the terminal and on YouTube. Coming up, how are chief executives thinking about AI? We're going to be unpacking a new report from Bloomberg Intelligence. We'll bring you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Oaktree Capital co-founder Howard Marks says AI has created a, quote, terrifying outlook for employment. He warns that the assumed productivity boom for AI fails to consider how many people will be able to afford the additional goods produced. Marks adds that some firms are piling on aggressive amounts of debt as big tech spends vast sums in an AI race designed to keep smaller rivals from catching up. And disruption risk is putting AI at the top of C-suite agendas. Meanwhile, that is the finding of a Bloomberg Intelligence survey of more than 600 executives. 36% of them say AI is currently their organisation's top priority. Matt Bloxham, senior analyst for Bloomberg Intelligence, joins me now with the report and the finding. What were the big takeaways then, Matt, from this survey?
Yeah, hi Tom. Yeah, as you said, this is a major study, over 600 C-suite executives involved, spanning over 9 industries, a global reach, and kind of talking to that kind of those previous comments. To some degree, this has been driven by fear. 68% of respondents kind of gauged the threat of disruption from AI to their company as either high or very high. And I guess linked to that, as you mentioned, 36% of the C-suite saying that AI is their top strategic priority, another 47% saying it's in the top 3. So this really is kind of garnering the full attention of the C-suite across every industry. I think what's interesting is that when you ask people about the objectives they've got for AI, what tops the poll is operational efficiency. 47% of respondents saying that was the most important strategic priority out of AI. Second most important was boosting revenue, which might be a little bit surprising, which took about 21%, so that was their top strategic priority. And when you kind of connect that back to kind of what this means to kind of financial outlook, some cautious optimism there amongst the C-suite, anticipating on a 3-year view about a 7% revenue gain specifically linked to AI and a similar 7% profit gain linked specifically to AI. So they see this as an important driver of future financial growth.
OK, really interesting stats in terms of the disruption risks that they see, in terms of efficiencies and in terms of potential revenue growth as a result of integrating AI. Was there anything surprising that came out of this survey?
I think that the big surprise is the messaging on jobs. And that kind of links to, again, what we heard in that earlier piece. So whilst a lot of people are making short-term tactical cuts to headcount. About 66% said they're making those changes. Actually, when you look at the strategic priorities, headcount reductions explicitly was one of the lowest in terms of importance. 38% put it as their lowest strategic importance. And when you look at the midterm, over 60% of respondents are saying they plan to actually increase headcount as a result of AI, on average by around 4%. So I think that's kind of interesting. You hear lots of kind of scare stories about the jobs threat from AI, but right now, it's more about productivity gains, and if companies need to invest more, including in human capital, to kind of unlock those gains, they're prepared to do it.
Okay, maybe we can all take some measure of comfort from that statistic then. What do these findings contribute? I mean, there's still raging kind of debate about the AI bubble, and maybe that really comes to the fore again in 2026. What are the survey findings kind of tie into that debate?
So one of the questions we asked is about what C-suite sees as the biggest roadblocks to AI implementation, and amongst the top roadblocks was concerns about the availability of AI infrastructure, and that fits into what we've heard from the likes of Microsoft about investing to get enough supply to meet the demand. But I think there's still a kind of big question mark, because amongst the roadblocks that we saw, one of the top scoring was the uncertainty around the high costs of AI implementation and the doubts about return on investment. So I think the C-suite is still unsure of the full benefits that AI can bring to their companies. I think that's going to be a big story for 2026, is companies are going to get clearer about where AI is benefiting their companies and where it isn't. And I think as we go out of 26 into 27, we'll have a much clearer idea of the weight and magnitude of scaled investments from corporates, and that's critical for the midterm outlook for the likes of OpenAI in particular, given the hundreds of billions of dollars they're putting into midterm capacity.
Yeah, indeed, cutting through some of the AI fog and uncertainty then maybe in 2026. Matt Bloxham, really interesting in terms of the findings coming through from this survey that you can get more details of course, on the terminal and on Bloomberg.com. Matt Bloxham, of course, from Bloomberg Intelligence. Meanwhile, HSBC's CEO, Georges El-Hedary, is ramping up the integration of generative AI into that company's operations. Speaking exclusively on the new Leaders with Francine Lacqua podcast series, El-Hedary discussed the technology's impact on productivity.
We now rolled to 170,000 of our colleagues internal productivity tools that can materially improve their capabilities of reading documents, reading emails, writing documents, emails, querying, challenging.
The dream.
Process. 170,000 of our employees. I mean, soon all the way to the 200,000+ employees. But for the moment that's in the rollout phase, we've already reached 170,000. Of course, I will be monitoring usage. I'll be monitoring super usage. Those will be the most, kind of influencing among their colleagues to drive the utilization. But utilization is not optional, because that's how people remain very relevant in the future workforce 5 years down the road. But we're using Gen AI in wealth, we're using Gen AI in markets, we're using Gen AI in contact centers, we're using Gen AI, of course, in technology. Now 30,000 of our technologists, engineers, are enabled with Gen AI. The speed at which we're able to patch for, say, code weaknesses or kind of vulnerabilities is 10 times faster already now with coding assistance than it was the case last year. 10 times. And we're not talking
in 12 months.
In 12 months. We're not talking some productivity in 5 years. We're talking productivity already here. We're already 10 times faster at identifying and patching some of these vulnerabilities in our code. This is hugely transformational. So you can imagine how important it is. Now I go back to the first part of your question, Francine, is what are the skills that are needed for banks? I would say there is no one particular skill that's going to be critical, but it is going to be the ability to learn. Because you can come in a bank coming from an engineering background, from a technology background, from an accounting background, from a finance and economics background. You can even come into a bank somewhat from a different field than directly related to banking. But once you're in the bank, your career, the customer's expectation are such that you're going to have to continuously learn. And if you think you know it all, then there is no place for those, in an evolving landscape. It's very important to continuously be ready to learn and put in the hours and the effort to learn something new, a new skill, an additional skill. Today, the most important learning capability is how to best embrace Gen AI and innovation in general.
HSBC CEO Georges El-Hedary speaking exclusively on the new Leaders with Francine Lacroix podcast series, which launches early next year. Meanwhile, a takeover battle for Warner Brothers is expected to last into the new year, locking Netflix and Paramount into a stretched-out bidding war. Paramount expected to raise its offer of $30 a share, a bid Warner Brothers has 8 days to respond to, but already rejected once. The Netflix merger deal is still in play. Cancelling it would require Warner Brothers to pay a $2.8 billion termination fee. There's a lot more coming up. We'll give you another preview in terms of some of the data points to watch ahead of that Fed decision. This is Bloomberg. Welcome back to Daybreak Europe. So it is Fed Day, of course, and these are the kind of metrics that could feed into the FOMC division splits across the Federal Reserve's decision-making body, of course, later today. We'll see if that transpires, but that is the expectation from many watching this. The white line is showing business optimism, business survey optimism, small businesses. And you can see, of course, it did peak at the early start of this year, then it came off very heavily into the summer, but now it has actually stabilised. The blue line is job openings, and that data point has been on a downward trajectory until you get the stability. And the most recent print coming out yesterday in terms of jobs, openings, jolts, coming in the highest level. This was the October data, the highest level in about 5 months. So there's a little bit of stability when it comes to job openings. Small business survey, sentiment survey is stabilising as well. So that does call into question, at least it will for some, how far this Federal Reserve can go. Fully expected, of course, to cut rates today, but it's the pitch going forward that is going to be key with the dot plots and the forecasts and what we hear from Jay Powell. Let's flip the board and have a look at what's happening for silver. What a remarkable year for this metal, up more than 100% year to date, breaking through $60 per ounce for the first time ever at 61 right now. What a turnaround. Outstripping the gains of gold. Gold up about 60% year to date. Part of this is ETF flows. Part of this is tight inventories, of course, of silver as well. And part is down to expectations that there will be more cuts from the Federal Reserve and that will support silver, again, after that rally that we've seen of more than 100% year to date. As a reminder, we're going to have all the coverage, of course, of the Fed throughout the day. Stay tuned. Opening trade is up next. This is Bloomberg.